Alright. So this portion is gonna be all Q&A, guys. I have a couple of things that I might uh that I might go over, but this is gonna be all Q&A. Can both of you hear me pretty good? Jeff, thumbs up. You can hear me? Good? Can you still hear me?
Yeah, I hear you loud and good, brother.
Alright, cool. Alright, so alright. Hey, you guys can leave your mics off if you want. It doesn't matter. Do you guys have any questions about anything? I want to go over anything extra about anything for it at all. No? Alright.
Yeah, I didn't hear you, brother.
Do you guys have any questions about anything?
Not right now. I'm just here to see what else I can learn.
Same here, man. The only thing is I was just trying to, because I looked at your training that you did last month on entering the trades, and I was just trying to understand about the confirmation questions that you need to ask yourself when you deciding to enter or not. And I know you said one of them was candlestick patterns, and I was just trying to understand the other questions to ask.
I can't hear you.
Check. Mike.
I hear you.
Yeah, hear you now.
Alright. Let me Mike. Alright. Alright, so you're talking about entries. Jeff, let me show you. Alright, this is the trade that we took last week, USD right? So for entries, let me just check this out. Entry confirmation. First thing you want to know is, that doesn't look right.
Is this recorded too?
Yeah, this is being recorded. Entry confirmations. Number one, what is the trend? All right. First, you want to know what's the trend, and if your trade is going with the trend. All right. Number two is price at support. Yes or no? Number three is price at resistance, at a resistance point. All right. So if the price is nowhere near a support or resistance, you don't want to take the trade. You only want to take it when it's close to support resistance. And when I say that, I'm not just talking about a zone like right here, a support right here. I'm sorry, down here support, up here resistance. I'm talking about the EMAs, right? Is the price close to the 50 EMA or the 200 EMA? All right. So for a sell, you want to know is the price. First of all, it's the 200 EMA at the top. All right. Number two is the 50 EMA below the 200 EMA. Alright? Can you guys see my screen?
Yeah.
Sure can.
Alright. Can you see my mouse? I'm sorry. I keep on forgetting this mouse.
Yeah.
Alright. No, I'm not home. My bad. Alright. So for a sale, okay. Now if the price is under the 50 EMA, if the 50 EMA is below 200 EMA, the next question is the price below the 50 EMA? Alright? Those three, now you're telling yourself, okay, I'm looking for a sale. Right? So, now you want to know, is the price away from the 50 EMA or is it close? If it's away, you're not going to worry about no sales or nothing. Alright? You want to wait until the price comes back to the 50 EMA. Okay? And also for a sale, remember, you want to make sure that your EMAs are actually trending downward, right? They're not going straight across. They're not going up. For a sale, you know, both of your EMAs will be coming down. Like you see here, all right? Once you start seeing the 50 EMA bend back up towards the 200, you want to be careful, all right? If the price is between the 50 and the 200, you're not doing nothing, okay? This is a no trade zone, all right? No trade should be taken between the 50 and 200, all right? So, when the price is coming back up close to, let me take this off now. When the price is coming back up to the 50 EMA, here is where you will start looking at the candle formations, all right? Here is where you will start looking at your candle formations, okay? So, price came, it broke the 200 right here, right? When it came back up, it retested. It's basically a retest. It didn't go all the way up, right? But when it got close, right here, what do we have? What's this right here?
A morning star.
Yeah, we have a little bit of a morning star right there, yeah.
The resistance.
Right here, 1, and 2.
A double tap.
Double top. Alright? Now when the double top hits, plus you have that little bit of a morning star right there, right? But then it also kind of lists like inverted morning stars. So you can't really, it's like, I don't know. But you have a double top, right? Now with a double top, let me do something real quick. I got something to show you guys. I have to send this in my Facebook. Hold on. With the double top, what are you expecting?
A drop. A
Yeah.
downtrend.
Yeah. Hold on. Alright. I'm going to give this to you guys.
Can't hear you. Can you hear me?
Yeah, can you hear me?
Okay, yeah, I can hear you.
I think it's because I was downloading something. All right. So I want to give you guys this, a copy of this, so that you can have this set up. You can print it out, have it beside your computer while you're trading, and you can be looking at formations, right? I'm going to be referring to that throughout the night. But so we had this break of the 200, right? A lot of people lose money in trading because they can't control their emotions, right? They see a big old break and they're like, oh my God, I'm gonna miss the move. I'm gonna jump in. And then they jump in, somewhere dumb, like right here, and then it reverses on them, right? That's why I would say, try your best to control your emotions because the price will always come back to your resistance levels or support levels after that level has been broken. Okay? So you got your double top. You might say, okay, well, the 50 EMA is not below the 200 yet. So I'm going to wait. Okay? So then if the price falls again, and now it comes back up to the 50 EMA right here. Okay? 200 is still above. The EMAs are trending downward, right? So we have a downtrend. Right here, that is right here, this is an engulfing bearish candle, okay? When you have one candle like this that can totally cover the previous candle, right? So if I can move this candle and cover over the green candle and you won't be able to see it. That's a bearish engulfing candle. That is a confirmation for a sell. Alright? So now, let's go over our confirmations. 200 EMA is at the top. 50 EMA is below 200. Price has broken both EMAs and has now retraced back up. Right? That's not the fourth one. The fifth one, we have a bearish engulfing candle. Alright? We're building our case for a sell. Right? And this is at the support area. What's the sixth confirmation of why we might want to jump in this trade? Look at the price. Where's this at? Right here. Where's that? 0.9710, basically. Right?
A resistance.
Yeah, it's a resistance level, yeah. And remember when we talked about last week about whole numbers that end in 000?
Oh, the bank rates, right?
Yeah, the bank rates, okay? This is around that zone. The bank rate is down here, right? But that's only 10 pips above it. So once I see that price start going, in my head, I'm going to take this to the next 100 pips, right?
Right.
And I think that's what we did. I'm pretty sure we took it from right up here. And after I saw this right here, I dropped the shot, right? And look how far I dropped.
Can't hear you.
right? Can you hear me?
Yeah.
I think every time I do something, it like cuts out my mic. So yeah, keep on letting me know. I'm sorry. So I said right here, after it hit that support, it was a good 50 pip jump. Okay? Now, that was about what, 6 confirmations? Are you understanding a little bit more, Jeff?
Yeah, I'm getting what you're saying now.
Alright. Now, once you have a big drop like this, once you start getting consolidation right here, right? When price starts consolidating, and then the EMAs just start to curve back up like this. At this point, once price breaks over the 50 EMA, it starts to rise up. If you're still in that trade, you want to get out. Okay? Because remember, last week when we were in the trade, after it got down here, I started seeing consolidation. I told you guys, hey, I just not took profit on USD CHF for about 60 pips. You know, I would recommend you do the same, or you can provide it out. But right after I took profit at 60 pips, it hit our take profit at 70 pips. So, you know, I missed out 10 pips. But at the end of the day, profit is profit, right? So, here's something that I do a lot is if I'm looking in the market, let's pick a random pair. Okay, JP1. Alright. So if I'm looking in the market on a 1 hour time frame, right? And let's say I'm looking at this shade right here. I know I'm looking for a sell, right? Let me go to 4 hours. Let me see something. You guys hear me? Alright, yep, good. Trying to find the formation. A lot of times if I'm looking at a chart and I see something like this, right? I'm like, man, I know something's there. I see something, but I don't know what it is, right? So then that's when I bring this out. I start looking at my charts or my patterns, right? This one, then we have this one, right? This basically tells you or helps you to confirm what you're looking at, okay? If you see a bearish candle and then a bullish candle, a red and green, that's almost exactly alike in size, right? You could expect the price to what? Go up, right? And then a morning star. You have a bearish, then you have a candle that doesn't really not opens and closes at the same price mark, like a doji. Then the next candle you can expect what? Expect it to go up, right? Then we have an upside down head and shoulders, or inverted head and shoulders. What can you expect? You expect after the second shoulder for the price to go up. Okay, where did you enter? You enter at the neck, right here. Alright? So that's just how you kind of read that It tells you exactly what to do according to what you see, right? Regular head and shoulders is just the opposite of the inverted head and shoulders, right? If you guys, honestly, all you have to do is learn one, because the other one, the other direction for a buy, is just the opposite. Just flip it. And just stick to double tops, double bottoms, head and shoulders, moon and stars. Those formations show up the most in the market, right? So you can catch a lot of pips just by looking for that. So now I'm going to talk about, well, are you good on that?
Yeah, bro, I get it. I get what you're saying.
All right, cool. So now I'll talk to you guys about okay, so a lot of the times I don't like to get the 100 pip, the 150 pip move, right? But what you want to do is set a trading plan. Alright, what was that? Here it is. Have a plan, right? How many pips do you want a day? How many pips do you want per trade, right? 25 pips, 30 pips per trade, that's fine. 50 pips per trade, that's fine, right? When I drop a chart or a signal in the group, and let's say my take profit is 100 pips, you don't have to stay here for the whole 100 pips. Once you get 25, 30, whatever your goal is, move your stop loss up, right, to secure that 30 pips or 50 pips, or two, go ahead and close out your trade, right? Be happy with that 30 or 50 pips for that trade and then move on, or take those pips, wait for the price to retrace back up, and then enter again for another 25, 30 pips, right? On Sundays and Mondays, I'm about to go for less pips, 25 pips, 30 pips, because there's a lot of fake outs in the market, right? So don't really get caught in a fake out or a reversal. So just go for 25, 30 pips Sunday and Monday, maybe even Tuesday, New York, right? But come Tuesday, London session, into Wednesday, Thursday, that's when we want to start looking for those big moves with the mid-week reversals and everything like that, right? So, I think that was just the main thing I want to bring out there. Since you guys are here, I'm not going to go over your charts. Hope you guys don't mind.
I don't mind.
Whatever you want to do, brother. I'm here to learn.
You know, I wanted to send it to you anyways.
Huh?
I said, you know, I wanted to send it to you anyways. I don't mind Jeff watching you because my chart.
Let me see what we got. This is Jeffries on EuroCAD 1 hour. What we got?
Now that you told me the information you told me, now I think that trade is the way I set that up is wrong now, right? because it's in between the EMAs, right?
Yeah, no, I'm not saying wrong, because it's still an opportunity, right?
Right.
It's just more risky, right? Like sometimes, like I take trades in between the EMAs, but I do it on a higher time frame, right? So I'm gonna bring this up
Okay.
because what's below. All right, check this out. Look at CAD JP line right now on the which chart is this? On the 4 hour chart, it's below the 200 EMA and the 50 EMA, right? But let me see the daily. On the daily chart, okay, let's look at this second. Never mind. Never mind. Bad example. Okay. Let's see yours. Okay. I got this thing marked up too. What's that, 1 hour? So, Jeff, it's not a bad chart, right? It's
All
not
right.
right. It's just a more risky trade. Because you know that after the price tested the 50 EMA and fell, and then it's showing some bullish momentum, some upward momentum, you know it's gonna go back up, right? So that's still
Right.
40 pips in between those, right? It's a risky 40 pips, but what you have isn't wrong. That's still a legit trade. So yeah, good job, bro.
Thanks, brother. Appreciate it.
But for a more safer trade, you will wait until, you already know, you'll wait until the 50 EMA comes back below the 200, right?
Gotcha.
What do you got, Princess? You're all option. Okay. Option under 50, looking for a retracement to the 618 around Tuesday, 9/11. Retesting resistance at current price, 1.62599, creating an M formation before going into downturn. Oh, I see the Fed back there. Okay. I couldn't even see the Fed. All right. 618 right here. All right. That don't look bad either. And you know what? I'm about to bring up my chart, and I'm pretty sure, what's that? 4 hour? I'm pretty sure I got the same thing. Oh no, not 3 hours. 4 hours. So yeah, I've come up with this resistance. Why? All right. So let me ask you this: what made you think that this was a strong resistance point? Put this.
the multiple candle touches.
Right
And
here.
then it just, yep. And then the price just looked extremely high. I didn't feel like it could go any higher.
Okay. Yeah. This zone right here. Let me see the my chart. I got that zone blocked off too as resistance because this is the highest that the price has been since February 2016. This is the daily. What? February. Oh my God, see that. February 2016. So it's definitely gonna sell. It's definitely gonna sell. And then on your 4 hour, look at the broke to 76, right? Came all the way up. Alright, so let me tell you this. Um, your fib, this is what I've been meaning to say.
Did
Your
you hear me?
fib, no, what you say?
I said I brought it down to the 618 because looking across, it looked like there was multiple touches on that line.
Right here. Boom, boom, boom. Yeah. So your fib is actually drawn backwards. Alright? You see how you came from down here up to where it's at now?
Mm-hmm.
You can't really put a fib here yet because you don't know if they keep on going up. Right? So that 618 here might actually be up here. You don't know. So what you want to do is you always want to draw your fib after the turnaround is done. Right? So let me go to the 4 hour. So for this, I still need to find a previous high, right? Because this is higher than this, right? So people going back, that's when I go to the daily. And I drop a fib from here down, right? Because at first, this move happened because of this move, right? I mean, no, it's not going no lower right now, because it's already turned around. So then that's when you'll put your fib over here.
So don't use the fib on the 4 hour, only use it on the daily.
No, the reason why you wouldn't use it on the 4 hour right now is because there's no previous high from where the price is at now. So you can't. You know what I mean? Like this point,
So you're not counting.
right?
You're not counting that as a previous high, higher than the previous high.
No, no, because this is lower. This point is lower than this point up here, right? This is
That's what
lower.
I'm saying.
Yeah.
It's higher than the previous high, so you wouldn't count that as a previous high. You see what I'm saying?
I see what you're saying, but where the price is at now, is that high? Where the price is at now, this is low. This is low. Does that make sense?
Yeah, I think I'm saying the opposite of what you're saying, though.
Yeah, you are. Yeah. So since the price is higher than any of these prices over here, you can't put a fib on that.
You have to wait till prices are back to that So what are you
Although
saying? You have to
I
wait.
would,
When do I put it?
you want to find the last high point that's higher than where the price is at now. So you have to go to the daily. Because it was so long ago on this particular pair.
Okay.
You know what I'm saying? So now you have to go over here to the previous highest point, right? So it has to be higher than where the price is at now. So that's all the way over here.
Okay.
Is that
Yeah. Okay, I get it now.
all right? So that's the only thing with that. You don't want to draw a fib on anything until the price has actually turned around. Okay. I hope that makes sense. I'll probably explain it again.
No, that made sense.
Okay.
I got what you're saying. Yeah.
But other than that, it's still good. Because is that a support or a resistance level and it's about to drop. We know that, right? I'm actually analyze this pair tonight. So the reason why I thought I know or I think it's gonna drop is my view, the price is so high, and then there hasn't been no kind of retracement, right? That can't go on forever. It has to retrace, right? Number two, on the 1 hour, we got a double top. And that double top is at a resistance area, a resistance area, right? So what about confirmations for a sell? We look at formations on our support and resistance. Sell at resistance, buy at support, right? Would I sell this right now? No, I wouldn't. We're at 15 minutes. Although there is a double top, me, personally, I know the sale is coming, but I wouldn't sell it right now. And I'm gonna go over why tonight on the analysis. Well, I'll tell you guys right now. There's only a couple of you. Number one, why I wouldn't, you guys already know, it's above the 50 EMA, and the 50 is above the 200. That's number one. Number two, looking left, remember, in the zone, and support resistance areas, when you're trying to determine what's going to happen, you always look left, right? Yeah, the price is at the highest point it's been in a while, right? But last time it was here, it still went up another 240 pips in the zone before it dropped, right? So that could happen now. That could happen now. And then if you're in a sell, what's going to happen? That 250 pip spike is going to hit your stop loss. And this spike right here, that happened in one day. So if you jump into a sell now, you'll be out the money. Right? If that spike happens again. Now remember what I told you guys last week, or it was probably in chat. In areas of interest like this, you want to start thinking like the bank. Because the big hedge funds and the banks, they see this, they know the price has to come down, but they control the market. They have the billions of dollars to move the market wherever way we want. So now we see a sales coming. Other retail traders see the sales coming, right? So while everyone else is jumping to a sell now, sell, the bank knows what they're thinking. So to me, in my head, I would think that if I was the bank and I wanted to make more money, right? I would make the market consolidate here. Now, while everyone is jumping to sales, all the independent traders like us jumping to sales thinking we're about to have a payday, I would make the market spike up again, like they did before. Hit everyone's stop loss that jumped in too early, send all their money, and then drop. Does that make sense?
Yep.
That's what you have to think. What everyone else is thinking about doing, do the opposite. That's why we wait until the price is below the 200 EMA and the 50 EMA. Yeah, we might miss out on 100 pips. It's better than losing 100 pips. You know? Made money is made money. Saved money is made money. Lost money, but now you're depressed and you're mad because you got emotional. Right? So guys, be patient. We know the sale's coming. Once it starts to come, it's gonna come. Right? So, it's risky to jump into a sale right now. It goes against all confirmation. So, when does it come back to it? Right? Another thing about jumping to a sale right now, with double tops in general, you'll go from the top to the bottom, right? You'll insert the neckline, and you'll take the sell from here. Looking at this, what's wrong with jumping to a sell and trying to write it down right there? What can you guys tell me is wrong right off the bat? Look left. The last, well, I guess I should wait till you guys answer. You guys know what's wrong with this sale?
The consolidation.
Yeah.
Since you put your mouse over there.
Yeah. Yeah. This is a resistance line. This is a resistance zone, right? I'm sorry, support zone. This is support zone. So yeah, you might see the sell, but the price will come right here with 20 pips or 30 pips, and then what? Go right back up. So for me, there's too many red flags here, right? But the sale is coming. It is coming. Another thing I want you guys to know is this. As far as support and resistance goes, I want you guys to understand that, you know how we have our support and resistance lines here, right? This zone, I can just say it's zones for a reason. The support and resistance is not set at a price, okay? Just because I have a support and resistance line here doesn't mean that the price has to come down to 1.4309 and bounce, because that is support. And the price breaks that, oh, we gotta look for a sell now. No, it's a zone. As in, this support resistance might cover This is your zone. Right here. Right? This right here, support resistance, might cover. No, I'm not gonna do that one. This one right here might cover this whole area. Like that. Right? So once price safely breaks it, comes back, and then goes up, then we know it's a safe area. Jeff, are you still here? Jeff?
Oh yeah, I'm still here, brother. I'm listening. I wanted to pop in and ask you a question as far as the what you just said. So is it better to go ahead when we drawing out the support and resistance? Since you said look at them as zones, because instead of using the lines, let's go ahead and use the rectangles then instead of using the lines. So they already outline the zones, or what?
Yeah, I mean you can. Yeah, there's nothing wrong with that. You know, you don't want to block out everything. To me, when I'm doing mine, let me take this for example. The time is it? Okay. When I'm doing mine, I'm looking at the wicks in the candles, right? So I try to cover at least where the candle comes down, the majority of them, and the wick, right? And this whole area, look, right?
Okay, I got you.
I try to get the zone of the area where it touches the most, okay?
Okay.
I might not cover the whole thing, but I'm gonna get enough. Remember though, this is also on the daily chart, okay? So this is a zone of probably 70 pips, 50 pips, right?
Okay.
So on a lower time frame, you could trade in between that. On the lower time frame, you see how you got this zone up here, and this zone down here? You could trade in between that.
Okay.
And that's still hella pips. Damn, that's like over 100 pips, right?
All right, so it's pretty much the difference of the time frame that you own, though.
Yeah, yep. And remember, the lower the time frame might be, the lower amount of pips is good for, right?
Okay.
The higher time frames, the daily, and sometimes the 4 hour, that's a lot of swing trading, right? You plan on holding that trade for a couple of days. Well, on the 1 hour, down to the half an hour, and 15 minutes, that's more intraday. You know, you might come in and trade today and take profit in London, you know? So it's shorter trades. Another thing I tried to explain to someone, talking about entry, right? I got 10 minutes. We were talking about entry and how you want to wait for the price to break the 50 and then come back and retest it, right? Now, after it retests the 50 or the 200 or your support resistance zone, where did you enter? Can you want to tell me, after this resets the 50, now you're looking at entering the trade on the 15-minute chart. Where did you enter into the trade?
After the confirmation candle?
After the confirmation candle, okay. What else?
The previous high?
And the previous high. If you're going for a buy, the previous high. If you're going for a sell, the previous low. Or it's also called market structure, right? This right here. That right there is the previous market structure, right? You got all this, a market structure is like cluster of candles together, right here. That's market section. Right here, market section. Okay? So you don't wait for a buy until the price breaks this. Boom. Right? Now you can go in, enter right there, and go in for 50 pips. That makes sense. This is however many pips that is. Boom. 80 pips. So if they're going for 30 pips, you got your pips. If they're going, if they're trade, if your pip per trade goal is 50 pips, you got your 50. Right? Boom. Exit out. Okay? For a sale, it's just the opposite. Look. Alright. So and this is why you want to wait. Look what happened here. Price broke to 50, and it's 200. Came back up for a retest. What did it do? It kept going. Right? If you would have came in, first of all, the 50-year May is above 200. Boom. But let's say it wasn't. Right? And you're like, oh yeah, this is a sale. You know, look at that huge freaking bearish candle. Oh, that's definitely going down. Right? You start getting cocky. After a couple of months you got straightened, start getting cocky. Oh yeah, I know that happened. I'm good. I'm gonna catch these tips. I'm gonna enter off this candle right here. Oh my god. Oh, I got a pinpoint retest. I got a wick. Perfect entry. Sell. You're jumping for a sale. You get 20 pips of profit. You're like, oh hell yeah, I already knew. I knew it. You know, I'm that good. You know? So I tell them, they can't see me. Then what happens? Boom. It reverses on you. Now you're mad. Right? Now you're mad. You gotta wait for the price to break previous structure. If it doesn't, then don't go in. Does that make sense?
Yes, sir.
Now, if there's someone smart, like us, you already know you're looking for a buy. Right? So while all these people over here, the other guys, lost money, while they're losing, what are we doing? We're waiting for the buy at the 200, the 50 EMA is above the 200, the price was still kind of above the 50 EMA. So we're on the other side, waiting for this, right? We're waiting for the price to come back up. Waiting for it to come back up, like it did here. Then what? Test the 50. We're still not in a buy. Not yet. Not until here. Right? Not until it breaks up through the structure. A little bit of drawdown. Right? But overall, how many pips is that? 7 pips? 75 pips? Everyone else is losing money over what? 22 pips? Right? We're making money. Okay? So don't be afraid to miss the move. That's my main thing. A lot of people get in trouble because they're afraid to miss the move. Don't be afraid. There's always more pips. There's always another setup. There's always a retracement. Okay? Alright. Any more questions? Alright, cool. So I'm gonna give everyone else 5 minutes